Hello, with me today I have Michael Morris, Chief Executive at Picton Property Income Real Estate Investment Trust. Hi Michael, thanks for joining me today. We've spoken before, but for those who don't know, could you quickly explain what Picton does and how it makes money?
So Picton is a real estate investment trust. We invest in commercial property located across the UK. We're unconstrained in our approach, and simply we make money by buying assets, holding, managing, and then selling. And through that whole investment process, we deliver returns both in terms of income, which is primarily comes through rent, and capital, which is the value appreciation of the assets during our ownership.
Okay, for those who might not know, what does unconstrained mean?
So we see that as being able to invest both across sectors and geographies. So within our portfolio, we have multi-let industrial assets, we have distribution warehouses, so that's in the industrial sector. In the retail sector, we have retail warehouses and some high street shops and supermarkets. And then in the office sector, we own those, be they in central London or in more regional cities across the UK.
So Picton has a strong track record and did especially well between the financial crisis and COVID pandemic. What was behind that period of outperformance?
So I think that there's multiple factors at play. I mean, clearly coming out of the financial crisis, we were invested in the right sectors. We made some good calls being underweight retail exposure. We had good gearing, and as the market recovered, we saw the valuation gains coming through across the portfolio. So that's at a macro level. We then drilled down. I think we had some good quality assets in the portfolio at the time, and the team and the active management that they do, upgrading assets, restructuring the way buildings are leased, added an extra layer. And then I suppose the final point is just the way we run the business. Operational excellence is a key part of what we do, and we were very fortunate to have a good debt structure, that contributed to that performance.
And things have been a little bit more difficult over the past couple of years, but there's been a significant recovery in recent months. Can you run through some of the obstacles that you faced?
So I think clearly the change in interest rate environment affected lots of asset classes. Commercial property was no exception, and as we saw values reduce, reflecting that higher environment, the market has become less liquid. That creates all sorts of challenges. I think for us, what's been a real focus is, as we've seen some rising vacancy on some of our office assets, for example, being able to reposition those for alternative uses. So we've had a number of initiatives, converting offices to student accommodation, offices to residential accommodation, even medical uses, etc. All of those things, have helped us repay debt. We've repaid more expensive debt. That's been earnings accretive, and I think a combination of factors, as well as improving sentiment to the commercial property market generally, has led to this recovery that you've been speaking about.
Okay, Picton shares trade at a discount to net asset value, but things have started to turn around. Why is that?
So I think our own discount has narrowed quite considerably this year. Part of that is really what's happening in the wider market. We're seeing a more general stabilisation in asset values, and that's clearly reassuring for investors generally to see that stability. But then, as I mentioned previously, some of the things we've been doing ourselves have clearly helped our own position. So, repayment of debt, reduction in debt costs, reduction in void within the portfolio are clearly all positive things that help improve sentiment and investor demand.
Michael, what impact do you think Labour's election victory has had or is likely to have on the sector?
Well, I think that at a headline level, just the fact that there is a government in place with a large majority provides general economic stability, which we've not had for a long period of time. I hope that with those changes, actually, there'll be stability within government. So actually, some of the policy decisions can be, properly thought through. I don't know the exact number, but the number of housing ministers or ministers that interact with real estate just went through a phase of changing very regularly, and that's unhelpful, I think, to move things forward. A lot depends on what is going to come up in the October budget, but I think generally, we're reasonably confident that it'll be a much more amenable operating environment.
Okay, Picton's dividend yield is currently just under 5%. Is that the kind of level investors should expect consistently over the long term? Is there anything that might change the income outlook?
Well, I think at a headline level, we're called Picton Property Income, so income is important to us. We know it's important to our shareholders, and I think the broad statistics show that real estate as an asset class generally tends to deliver about 75% of its return through income and the balance through capital. Clearly, that changes over cycles. We've got occupancy that can increase in our portfolio. I think that's a driver of income growth, and we're also invested in a number of key parts of the portfolio that are seeing rental growth that also should be a driver for income growth. But I think the way we think about Picton is it's not all about income. Income is important, but actually in terms of total returns, you want to invest in assets that are appreciating in value, and sometimes you might accept a slightly lower level of income return that sees capital protection versus some assets perhaps in the market that might offer higher yields, but there is more risk to the capital side.
So is interest rates, the Bank of England held interest rates at 5%. As interest rates come down, you still expect the level of income generated by Picton to remain relatively constant?
Yeah, of course, because one of the good things about Picton as at today is that all of our debt costs are fixed, and from a earnings perspective, that puts us in a good place. If we do see continued reduction in interest rates, that's helpful, I think, in the economy generally. It's also helpful to property values and financing costs in the wider market. So yeah, we don't see that would be a problem at all.
And what do you see the main opportunities to drive shareholder returns over the next 12 to 24 months for Picton?
So for Picton, I think one of the key focuses for us is really looking at the disconnect between our current share price, which has increased, thankfully quite markedly this year, but there is still this disconnect between underlying net asset value of the company and share price. Now, Picton's not alone with that. That's a theme across the real estate sector. But I think in an area where broadly across the three main commercial sectors, we're currently seeing rental growth, good occupational demand, against a backdrop of reducing interest rates and financing costs, and where you can improve occupancy, I think generally you're going to be seeing a narrowing of those discounts actually sector-wide. And I think that clearly is going to be a key driver of shareholder total returns.
Michael Morris at Picton Property Income, thanks very much for joining me today.
Thank you.